President Obama re-elected. Dow drops 2%. Massive layoffs are announced. So are we already heading towards the edge of the fiscal cliff? I'm Allen Barton. Stand by for Front Page. Joining me on set to discuss, Terry Jones, Associate Editor of Investors Business Daily, and Scott Shackford. Shackford, right?
Yes.
I thought I was going to say Shackleford, and then I was thinking about the Arctic, and then, you know, it was going to be really bad. Associate Editor over at Reason.com. Good to have you guys here. Let's start. So that happened. What do you think of the market reaction to the events of Tuesday? Is this something where you can really go like, well, this is the market saying this is their response? Or I've heard also people say, look, capital gains rates are going up. People are going to be taking, there's going to be a sell-off because of that issue alone. It wasn't really about the election per se.
Well, but that's certainly part of it. But that, hey, that's important to investors, and going forward, it'll be equally important to investors. No, this was I think an honest response from the stock market. I think they, market participants were as surprised as many conservatives were that the candidate for conservatism and lower taxes didn't do as well as they thought. So I think this, market people look out. They look forward. They look 6 months to a year out. That's the way the stock market works. It discounts the future, and they're looking out and they're seeing a lot of uncertainty still with the fiscal cliff. They're seeing the very good likelihood of higher taxes and slower economic growth, and even possibly a recession early next year. So none of those things are good for the stock market.
All right, let's take a look at some of the stories making headlines the day after the election. You can see on the screen here, stock futures hit new lows, stocks themselves fall, fiscal cliff hampering the economy. CBO also issued a warning that the fiscal cloud could trigger a recession outright that would take unemployment back to 9.1%. Et cetera, ad nauseum. Scott, what do you think? How concerned should we be here? It just feels like everything that we've warned about for 2 to 3 years is just irrevocably coming into play.
Yeah, the CBO report today warned that in a decade, our debt could take up 90% of our economy. So it'll be interesting, actually, beyond the stock market's response to the election today, now that the leaders are responding to the fiscal cliff argument, and Obama gave a speech and everyone's giving speeches. I'm very curious about what the stock market's going to be tomorrow. The president today said that he would veto tax cuts, tax cut expansions for those with incomes over $250,000. So I can only imagine how our stock market's going to react to that.
All right, so as you mentioned, the leadership in Congress wasting no time in addressing the fiscal crisis. Let's take a listen to Speaker Boehner.
There's an alternative to going over the fiscal cliff, in whole or in part. It involves making real changes to the financial structure of entitlement programs and reforming our tax code to curb special interest loopholes and deductions. By working together and creating a fairer, simpler, cleaner tax code, we can give our country a stronger, healthier economy. A stronger economy means more revenue, which is what the president seeks. Because the American people expect us to find common ground, we're willing to accept some additional revenues via tax reform.
Wow, that's all brand new. Wow. So what do you think here? I mean, he's saying new revenue via tax reform, but then you heard Obama today. Well, we didn't hear that his clip, but he said, I'm glad to hear that Speaker Boehner is open to more revenue from taxes, completely misstating what Boehner is open to. Yeah. I have a feeling that the Republicans are going to have to cave somewhere. They're going to have to say there's going to be a tax increase for AGI of $1 million or up or something, or $500,000. But what do you think is going to go on here?
Well, I fear that is what will happen, because there isn't a real good record on this. And what typically happens is the Democrats are very good at negotiating these things. They negotiate tax hikes now, and they promise reforms and cuts later. Yes, we're going to make those. They did that with Ronald Reagan. The cuts never came. That was one of the causes of the deficits of the 1980s. The cuts that were promised by Tip O'Neill back then never materialized. The same thing would happen this time. let's hope the Republicans don't get rolled on this, because this is a very crucial thing. People say, well, why does it matter? You know, you raise taxes on people over $250,000. What does it matter? Well, let me tell you, those people who have incomes over $250,000, more than half of them have business income on their income tax returns. That business income comes from small businesses they run. Small businesses, believe it or not, employ a lot of workers in America. 1.2 million small businesses owned by these wealthy people employ 54...
Those nasty job creators.
Nasty
Those
job
creators. There's no such thing as a job creator.
They employ 54% of the private workforce. I mean, it's a huge amount, and they will start letting people go, as they already are.
Well, fortunately, thankfully, thanks to the stellar selection of Senate candidates on the Republican side, we are going to get another period of time of listening to the most exciting, enthralling, heart rate-inducing speaker of all time, Senator President Reed, of course. Let's take a listen, because he's been working on his speechifying. And get ready for the excitement. Here we go. Here we go.
It's better to dance than to fight. It's better to work together. Everything doesn't have to be a fight. Everything doesn't have to be a fight. That's the way it's been the last couple of years. So everyone should comprehend, especially my Senate friends, that legislation is the art of compromises, consensus building.
Get off the floor. Get off the floor. I know you've collapsed from sheer excitement. No, wake up. Wake up. We got more of that. We're going to be listening to that for a long time. Consensus building. Can we talk about basic legislation, like, say, I don't know, a budget? They haven't passed a budget in 3 years. He hasn't done anything. You know, it's very unexciting to listen to these guys talk, because there's just absolutely nothing new. I don't know if there's anything new to say. What do you want to say about this?
You know, it's just between the two of them, it sounds like the same kind of nibbling around the edges. Those fights are important because, you know, there need to be huge cuts. Even if they raise taxes, there need to be huge cuts, which no one wants to talk about.
This is the point I've been trying to make. Either of you, whoever knows the answer, let's give the Dems every tax raise they want to give on rich people. Let's give it to them. How much does that raise? $100 billion?
It doesn't even get you there. If you raise the tax, this is what Obama's asking for.
Yeah.
He's asking for a restoration of the tax rates on the wealthy that existed under President Clinton.
39.6.
Yeah, if you do that, you raise taxes on all those over $250,000.
Just what he wants.
You get. We had a deficit last year of $1.1 trillion. You get $34 billion.
$34 billion.
3% of the deficit.
Not even. Or no, you're right.
About 3%. About 3%.
If you took all the money,
Yeah.
all of the money from the rich people,
Just confiscation.
Asset
confiscation.
It would pay for 3 months of government.
Yeah. So you know, it just seems as though we're whistling Dixie here. So anyway, Washington's trying to solve the fiscal mess. Fed says it's going to continue with quantitative easing. So what about Fed actions here? Is there anything that they're going to be able to do as we just keep on moving forward?
No, they will keep printing money, continue distorting our markets and global markets, and once it ends, there's going to be an awful reckoning, because rates will have to rise, and when they start rising, it's going to wreak havoc across broad sectors of the economy that have locked in expectations of low interest rates basically forever. It's not going to last.
Including the deficit itself, because obviously the interest that the government's going to be paying on its debt will suddenly consume gigantic portions, and guess we're into what then? Austerity, et cetera?
Yeah.
People in the streets.
I think
it's funny.
I think I've said this before here. You know, we're currently spending about $250 billion a year to service our debts as a nation. If interest rates just go back to their historic norms of around 5%, that triples. Triples. It goes to over $700 billion. So and it will happen overnight. It won't take
maybe
long.
the government could take out one of those Capital One Visa cards and then apportion the miles they're going to get to every American citizen.
That's not a bad idea.
And so while we all go broke, we can fly for free to somewhere magical and forget about this nightmare. That's all the time we have for today. For Terry and Scott, I'm Allen Barton, and you've been watching Front Page.